Asian markets fell after lackluster earnings from U.S. tech behemoths Tesla and Alphabet dented risk appetite. The U.S. dollar was broadly steady, with traders watching out for an inflation reading on Friday and the Federal Reserve meeting next week. Locally, Vodacom has reported a 1.5% rise in group revenue for the June quarter, with service revenue rising 10%, which is above the group's medium-term target, helped by strong performance from Egypt. The rand extended losses in early trade as investors turned their attention to local inflation figures to get a clue on the country's future interest rate path. Inflation has been above 5% since September last year, and the central bank estimates that inflation will only stabilize at its targeted 4.5% over the next few quarters. Looking at the markets, the Aussie is flat, industrials also flat, financials in negative territory, down 0.5%. The resources bucking the trend, up 0.8%. Looking at the currency, the rand's trading at 18.29 to the dollar, 19.82 to the euro, and 23 rand 62 to the pound. To give us more details on the markets, we are joined by Fahima Adia, who's an equity analyst at Momentum Securities. Fahima, thank you so much for your time. Let's get your take on global and local market sentiment, given the fact that we've been waiting for U.S. tech earnings. What's driving market sentiment right now?
Afternoon, Astasha. Thanks for having me. Yes, so we saw the JSEs pretty flat this morning, still above that 80,000 point mark. I think it seems to be holding up a bit better than what we've seen on the international markets after we saw some of those big tech companies like Alphabet and Tesla release their results. So while Alphabet did seem to come in line with what consensus was looking for on the top and bottom lines, it did miss a bit on the YouTube advertising revenue. And Tesla missed earnings expectations quite a bit. And I think that's just basically had a negative impact on the US stock markets in general.
With that said, then, speaking to a couple of analysts, they're saying that the first view of these tech earnings hasn't been inspiring. How high is the bar for the tech earnings for this particular quarter?
I think it's probably not as high as what we had seen in the first quarter. But we have to bear in mind that we can't really expect that earnings growth to just continue indefinitely. So I think it's probably what most analysts were expecting, a bit of a pullback. But the broader consensus was still quite bullish. I think especially on your bigger tech companies such as the likes of your Alphabet and unfortunately I think that has fallen a bit short on that. From my point of view, though, I think that it's inevitable that after such a strong bull run in the first half and such excellent earnings growth, we will start to see a bit of a pullback now in the next half when it comes to these tech companies in terms of their growth in earnings.
Let's bring things locally for a bit and stick with company numbers. We had Vodacom releasing their quarterly update. Was there anything to take away from that particular statement that came out on SENS that caught your attention?
So I think the market responded pretty well to the update. I see the stock price was up about 4%. Bear in mind that the share price has been under pressure this year due to quite a tough macro backdrop. So it reported quite a muted increase, I think, though, in revenue, up just 1.5% on a group level. It is struggling with Forex headwinds. If we look at the service revenue, though, that was up about 10% and underpinned by pretty good performance coming there from Egypt. So if we look at Egypt, the performance there has just been quite good. And we see service revenue there grew by more than 40%. And it's quite a big component of the Vodacom group now. It's contributing more than 20%. And then also on the financial side of the business, the financial services, fintech business has actually also been doing very well. They say that they've got almost more than 400 billion in mobile wallet transactions that have been processed for the period.
Let's talk about the CPI print that we got this morning from Stats SA. Given the readings on that particular print, what does that mean for the sub then going forward? And I'm asking that based on the voting split from the last MPC, where 4 were voting for the interest rate to remain unchanged and 2 were advocating for a cut.
Yeah, so I think the results look good. It's showing that the CPI numbers are actually down to the lowest that they've been this year, which is definitely supportive for interest rate cuts, and pretty much in line with what economists were looking for. We're not quite yet at that 4.5% midpoint that the SARB is looking for. But it seems that inflation has been falling more rapidly than what was initially anticipated by the SARB. So we are now expecting that it could reach that 4.5% midpoint towards the end of the year, whereas first we were expecting that would only happen at the beginning of next year. So I think the expectations for a rate cut to come from September onwards is looking quite favorable at the moment.
Let's take things stateside for a bit. I mean, if you look at US stocks, they were the big winners so far, at least for 2024. And part of that was being driven by the supportive background of resilient growth. And on the other hand, you've got this exceptional performance coming out of the so-called Magnificent Seven. Are you expecting that momentum to continue for the second half?
Yeah, so like I said, I think the tech stocks obviously have done very well in the first half. We saw very strong earnings growth come through. But the question is that sustainable? And I think that's kind of what's impacting the markets now after we saw some results come through from the likes of Alphabet and Tesla, which is showing that they missed on some of the items for Alphabet, and Tesla completely missed earnings expectations. So there are concerns, I think, now that there is going to be a bit of a pullback in terms of earnings growth on the tech side, and that's why we're also seeing more of this sector rotation, I would say, now out of the tech mega caps and into things like small caps and other sectors that have kind of been overlooked up until now, and that maybe offers more value on the back of coming interest rate cuts.
Fahima, thank you so much for your time. Let's leave it there. That is Fahima Adia, who is an equity analyst at Momentum Securities.